Hello and welcome to another update video about ADA. On the ADA chart, we still deal with this ongoing correction here, probably still this wave 4. Price is still unfolding in this fourth wave here at the moment. The third wave likely topped still, that's still the assumption, on the 9th of December. And then we're dealing here with this quite complex correction. There are two wave counts, one is yellow, one is white. In the yellow wave count, we have a WXY structure, so wave W, wave X, wave Y. The structure is relevant because in the Y wave, it allows for a larger three-wave move, A wave, B wave, C wave, in which even the B wave could still be unfolding. So it might give us a larger B wave, or actually it's just a simple A, B, C. In this scenario, the B wave could even overshoot once more. Okay. To be honest, both counts are very similar. Both would likely end in the orange support area. The question is just how much of a rally do we get? That's basically not predictable. But we can say that we need to still be ready for a bit of a corrective rally if it wants to do it. Whereas if we get a break below this 54-cent level that I've been highlighting for the last few days as basically confirmation level that we are finally coming down into the support area, it's basically this swing low, the low of the A wave in yellow. Yeah, then we have confirmation that we're finally really coming down in this C wave, off wave Y, off wave 4. Basically the white count just allows for another overshooting B wave. I've got it on the chart just to indicate that it's a possibility, because we know that in fourth waves, and ADA is likely in a fourth wave, these overshooting B waves, they are common, especially in the modern markets, especially when we look at coins that are in a fourth wave. Very common. Overshooting B waves, fake outs, which is one of the reasons why breakouts are hardly tradable these days. They really are hardly tradable. You get a lot of these fake out breakouts. Yeah, they can still work, and that's also where Elliott wave helps us to distinguish between, let's say, proper breakouts and just fake outs, because when we look at Elliott wave, we get a good understanding in advance if we're dealing with an impulse wave breakout, so basically like a rally in a third wave or something, or if the breakout is likely going to be just a B wave, just a corrective wave, which might lead to basically eventually just a breakdown, which this one would be, because it is most likely that if we get a breakout from here to the upside, make another high, that it might just be a marginally higher high, and eventually we will come down into this orange support area. So at the moment, I see price action still as very, very corrective. You see the nature of the structure. It just looks corrective. You have a lot of overlap there. The momentum to the upside has reduced. It's basically died down. Now, it's not that we're coming down in an impulse or that we are, dealing with a very bearish structure. No, it's just at the moment corrective, which is very much in line with what Bitcoin is doing. And the idea would still be that as long as we're holding this support area, which is between 34.5 cents and 50.7 cents, that we should still see a fifth wave to the upside. These are just the relevant Fibonacci levels that we can observe if the price comes down for a potential reaction. If I measure the Fibonacci levels from here, and I say, okay, we had the yellow A wave that bottomed here on Monday, we had a B wave top, then, one of the key levels to watch is the 100% extension level at 49.6 cents. Below that, we've got 47.1, 45.6, and then 43.3. Just the next main level is 50.7 cents and then 49.6. Okay, it's a difference between what is a support area and what's a Fibonacci extension, which is more like a target. So either way, I have no evidence that the overall correction is over. I think it might take a little more time to really develop and then get completed. Looks like we start to be rolling over here slowly and then could come down into support. Find support here somewhere. We need to see when we get the first notable reaction. This could indicate the start of the fifth wave. Overall, we would still like to see that fifth wave develop. Zooming out a little bit, again, it reveals the overall pattern. I'm tracking here still a diagonal, wave 1, wave 2, wave 3, wave 4, wave 5. After these 5 waves, we get a decision point, major decision point. Once we have 5 waves complete, I'm going to use that information, calculate the support zones for a corrective pullback, for a long trade opportunity to $1 plus. Yeah. However, after these 5 waves, due to the chart context, yeah, and due to the potential that this is just a larger A wave, a B wave, this low in June, and a C wave rally, basically ending diagonal as an ABC structure that allows for another bear market low. Now, I'm not going to focus on that until we have a break of support. So for now, we first of all track this ongoing uptrend. I'm tracking this potential 5-wave move to the upside that's unfolding. And once we have these 5 waves, we can really put a nice setup onto the chart that allows for a, maybe even the last entry point before really a bull run starts. At the moment, this is just, it looks already good, but it's not yet what you would, it looks bullish, but we haven't got the first 5-wave pattern still, still only 3 waves up. Could just simply be a corrective rally at the moment. So we remain on the side of caution while, however, following the uptrend, and then we take it level by level. And after the 5 waves are complete, we get a major decision point. I'll keep you updated. So hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.